Welcome to Fund Spotlight, where we put on the spotlight on the funds recommended by COL Fund Source. I'm Carlo, Head of Customer Experience at COL Fund Source. In this episode, we have here Zerge Zandueta. He's the fund manager of the COL Strategic Growth Fund, and he will help us understand the strategies behind this fund and how it can help you in building a diversified and resilient portfolio. Hi, Zerge. Good morning.
Hello, Carlo. Hi. Good morning.
Yeah, we're very excited to discuss more about CSG, and we just want to understand, Zerge, what makes this fund sets apart from the other equity funds in the market.
And just to give you at least a bit of context there, I've been in the industry for quite a long time. I've seen how a lot of funds operate. Normally, when I look at, like, let's say, a fund that says they're actively managed, I look at their fact sheets on a monthly basis. You'll see that they'll say they're actively managed, but when you see that the market is falling sometimes, the positions that are still invested in equities would tend to be between 85 to 95%. The tough thing is, especially with the Philippine market, as we've learned over the past several years, is it's very cyclical. So there are ups and downs. So if you're not stepping aside when the market is about to fall, you really fall along with the market. So with our fund being actively managed, when we see that, tumatabi talaga kami. So in that sense, you could say that this is a fund that's designed to navigate through the volatilities of the market. And what allows us to be able to do that is the fact that we really practice flexible asset allocation. So this fund has the capability of actually going 0% equities, practically 100% cash or 95% fixed income, if we feel that the opportunity is actually there. So actually, case in point, recently, there's been a lot of volatility in the market with, like, let's say, Trump's tariffs, Israel-Iran war. So during times like that, we see that the market is about to fall. We really step aside. We let the market fall. When it looks like things are stabilizing, that's when we re-enter so that we can capture when the market actually rebounds. So if you look at it, I'd say there's really a big focus on risk management with this type of strategy and the way we actively manage the portfolio. I would say that's really what sets us apart.
I think it's really important for our investors to understand the flexibility of your strategies, considering the positioning in the fixed income and cash side.
Correct.
If the equity side will be encountering a lot of volatility, like in the past 6 months because of the geopolitical risk and the tariff, it helps our client to have a decent return while still managing the risk, as you mentioned.
That's right.
Yeah. In the coming quarters, Zerge, which sector are you looking into for the growth opportunity of this fund?
Yeah. So right now, it looks like the market is trying to rebound. Actually, the second quarter, we saw the index go up actually 3%. So after a very bad start to the year, ngayon it's starting to show signs of recovery. But in general, we think there are still some headwinds out there. So if you look actually at the Philippine GDP, during the first quarter, it was good but not great. We missed estimates, for example. And there are pockets where there might be some slowdowns going on. So what that really creates is an environment wherein medyo uneven yung performance ng individual stocks. So you really need to be selective. So for us, the sectors that we like are sectors that could have their earnings be resilient despite the changing or even, I could say, weakening environment. So for that, we actually like banks for their earnings versatility. So we've noticed over the past several years, banks are the ones that consistently are able to grow their earnings year in, year out. So even if, like, let's say, they're saying the rate cuts that are upcoming might, like, let's say, reduce their margins, but even, like, let's say, the initial cut, may parang pang-offset sila. Like, let's say, they're going to make more money, for example, in their trading book. So we like banks. We also like defensives, like power. So we think even if there's a slowdown, people are still going to use electricity. So power companies will be able to perform well in that type of environment. And what we like about them in particular is the dividend yield. So it's pretty high at the moment. So a lot of them are around the 4 to 5% range. So yeah, I would say those two. Just because of the earnings resiliency.
Yeah. Even on the equity side, we can see here that it's really strategic. So the investors can already have a diversified positioning also on the equity. So In the past few years, Zerge, can you share with us the year-to-date performance or even the since inception of this fund?
Yeah, so the CSG, we put it up October of 2023. So this year will be about the second year anniversary of the fund. So year to date, CSG is up 3.5%. So that's actually better than the index, which was down 2.5% so far. So when I said that the CSG is the fund that we're actually designing to be able to weather the volatilities in the market, actually a good example of that was the first quarter. The market was down 5%, if I'm not mistaken, in the first quarter, but the CSG was just down about 0.5%. So you were able to preserve the portfolio value during the first quarter. And then second quarter, we saw the market rebound. I think the index was up 3%. Fortunately, because of the way we positioned actually on the equity space, CSG was also up during the second quarter. This time, parang 3.5%, 3.9%. So actually on the year to date, as of the end of the first half, CSG is up 3.5%. On the since inception, from October of 2023, the CSG is up around 9%.
Yeah. I think it's very important to understand the risk management strategy because as you've mentioned, during a market downturn, CSG is still up in terms of the performance. And now that it gained 3% around the first 6 months, looking at the next second half of the year, for sure, there will be a managed risk and still capitalizing on the opportunities given the sectors that you've mentioned on the equity side. I think we want to understand also the thought process of your team or the fund management team. What framework or strategy are you currently using that guides your investment decisions on a regular basis?
I would say the most important component really is the risk. So when we tell investors that this is a fund, like when we say it's an all-weather fund, actually, the CSG, what we mean by that is, we try to manage the volatility for you. And the way we're able to do that is because of risk management. And that's something that really guides our framework. And the risk management does not start actually kapag may position ka na. The risk management actually starts even before you initiate the position through your stock selection and through the timing of when you actually buy those stocks.
Yeah.
So what governs our methodology is we both do parang top-down approach and then bottom-up. So when we do a bottom-up, we look at stocks. First of all, gusto namin mura. So valuations actually have to be low. And then we would look, so when prices are low, when stocks are low, normally there are some challenges normally which have kept the share price depressed. But because the share price is depressed, valuations are already low. Meaning mura na yan. Meaning binentahan na siya. Not a lot of people are already there. What you're actually scoping for is the opportunity in terms of when it's going to go up. And that's when, like it's another portion of our framework, which is the use of technical analysis helps. So we use technical analysis to actually time kung kailan na siya aakyat.
Right.
And then aside from that, we also use macro analysis. The top-down really is looking at global narratives, what's happening out there at the moment. Is it a risk-on, risk-off environment? When we gauge it's a risk-on, given there's already a selection of stocks that we like, when we see the risk-on environment, the technicals and the fundamentals align, that's when we actually start buying. And just by doing that alone, may risk management element ka na dun eh. Kasi you pick the stock that is under-owned, is under-loved. So, kumbaga parang the downside of that stock is also less because people have already sold. So, that's one. And then of course, when we already have the position already, we continue to monitor it. And another aspect of our risk management as well is profit-taking.
Right.
So normally people don't associate profit-taking with risk management, but it actually is. So sometimes, like I say for investors, CSG investors, you might notice, like I say, when the general market is going up, the gains in CSG might not actually match the gains in the index. But that's also because we already take if that there might be headwinds eventually. Like let's say the market hits resistance, overvalued na siya, then when something's happening in the global environment which could put it at risk of toppling over. So tayo, since nakita na natin yun, papangunahan na natin. We're gonna take profits. So essentially that's our methodology. It's really governed by risk management. On the fundamentals, we focus on names that are undervalued, have good valuations, na yung kwento nag-i-improve earnings looking to improve, we want to focus on names like that. And then we use technicals and sentiment analysis to actually time when we're going to go into those teams or those individual stocks.
I think these aspects of your strategy can help investors leverage on your expertise. Let's say they have an existing portfolio already or assets and they wanted to add more into their overall portfolio so they can have a certain position that is more into risk management while also taking into consideration the profit.
Yeah.
So let's say, for example, there's an existing investor with an asset in hand. Why do you think they should also consider a certain percentage into investing with CSG?
Yeah. At least, first of all, if you're like, let's say, an investor and you want to build wealth over the long term, equities is really an asset class you need to be in.
Right.
Because if you look at across all of the studies, equities is really the best performing asset class really over time. But of course, there's also volatility along the way. So like it's if you're an investor, actually, especially if you're younger, a bigger allocation to equities is more preferred or recommended because you have the benefit at the time to weather the storms and the ups and downs of the market. So like I say right now, I think the argument for Philippine equities and CSG in particular is the fact that you've been actually undervalued for quite some time. So from a valuations perspective, when I entered the market, that was around 2010. The valuations of the Philippine market hovered between 15 to 18 times PE. So right now, it's doing 9 to 10 times.
Yeah.
So at least just going back over the last 15 to 20 years, you could say that's cheap.
Right.
So valuations from that standpoint is good. And then in terms of when I also entered, the Philippines was getting its investment grade ratings. There was a lot of foreign flows that have been coming into the market and yun yung nagpaakit sa index.
Right.
But right now, like I say, since 2018, foreign investors have actually been selling the Philippines year after year. Some people might see that as a negative, but like I say, me, as a long-term investor, how I look at that is, the foreign investors are actually not in the country anymore, and there's scope for prices to go up when they actually go back in. But you just really need to see a catalyst, a turn in terms of the country's fundamentals, and eventually it's going to go up. And I think those catalysts, they're going to be there down the line, but at least the fundamentals, parang the bedrock, is in place because Philippine long-term fundamentals are still there. We still have a very good demographic setup. Diba GDP growth, kahit nag-miss ng konti ng first quarter, mataas pa rin yun. 5.4% is still better than, like I'd say, 90% of the world's GDP. Diba? And even our earnings growth, I was looking at the earnings growth. First quarter, kahit na sabihin mo 6% earnings growth lang yung market. If you look at, like, let's say, the rest of the world also, rest of the world just 4 to 5%.
Right.
So I think the Philippines is still in a good place long term. It's just the sentiment is not there right now.
Yeah, I think the cheap valuation will be a good entry point for our investors. So considering that the valuation right now is somehow comparable with the valuations 10 years ago, if you're a long-term investor, this could be a good positioning for you. Then eventually, as you look at your risk appetite and your time horizon, then consistently adding up into your current portfolio, then you will be in an advantage in the long run.
Yeah.
So the good thing here is that they have an advantage in terms of the expertise of the fund manager. And of course, if they want to focus in building their wealth, they can focus on their business or their current work.
Right.
And so consistently doing a peso cost averaging strategy and looking at a long-term view. So I think those are the things that our investors should consider. And I hope that they will be able to follow the fund fact sheet as well, the data that we are releasing. And we want to encourage everyone to visit our fund source website. We are publishing reports on a regular basis, and you can follow our quarterly outlook so that you can be updated of our fund picks. And again, thank you, Zerge, for your valuable insights in today's Fund Spotlight. And for sure, our investors learned a lot for this session.
All right. Thanks as well, Carlo.
Thank you, Zerge, and see you again soon.
All right. Thank you.